Tax Bads, Not Goods by L. Randall Wray. This is another installment in the series on the MMT view of taxes. I'm back from China, participating in the annual Hyman P. Minsky Summer Seminar at the Levy Economics Institute. Yesterday, my colleague, Matt Forstatter, gave a talk on the job guarantee and green jobs. Along the way, he made two particularly insightful comments on MMT and taxes that I'll use to introduce this installment. First, he discussed the MMT view of modern money, that is to say, the money that has existed for the past 4,000 years, at least, as Keynes put it in his treatise on money. The money of account is chosen by the sovereign and used to denominate debts, prices, and other nominal values. It is the dollar in the U.S. It is like the inch, the pound, the meter, the kilogram, the acre, or the hectare, a unit of measure. Matt put it this way: the sovereign can no more run out of money than it can run out of acres, or inches, or pounds. We can run out of land, but we cannot run out of acres. We can run out of trees, but we cannot run out of the linear feet we use to measure them. You cannot run out of a unit of measure. The dollar is the measuring unit in which we keep our monetary records. We cannot run out. Second, and more relevantly for our story today, Matt said that a guiding principle for choosing what to tax should be tax bads, not goods. We've previously established that taxes drive money. We've also established that from the perspective of the sovereign that creates the money, the purpose of the monetary system is to move resources to the public sector. Clearly, we do not want to move all resources to the public sector. We want to leave some for the private purpose. Further, we want some efficiency. I'll leave the definition of that vague for now. In this process, in the sense that while we want to move some resources to the public sector, we do not want to discourage useful private sector activity. It would be even better if this process of taxing to move resources to the public purpose actually encouraged more activity that was beneficial for pursuit of both public and private purposes. So we need to think about what kind of tax can drive a currency without diminishing private initiative. For example, what if we taxed paid work at a rate of 15% in an effort to drive the currency? Let us begin with a non-monetized economy, say tribal or feudal. The newly formed sovereign state wants to move resources to itself by imposing a wage tax of 15%, spending its dollar-denominated currency to hire labor. From inception of our monetary system, we could not drive the currency because no one would work for pay. The tribal or feudal society members would go about their activities, raising their crops and hunting their deer, with the shares of output distributed as prescribed by custom. No one would need to work for money wages, so they could refuse the offer of currency for work, and they could avoid the tax by refusing the paid work. The optimal strategy is to avoid monetization. The new state would offer its currency and find no takers. It would have to resort to obvious force, send in the troops, to get resources for the public purpose. A tax on monetary income will not drive a currency unless the economy is already monetized. This is precisely what the European colonial powers found when they tried to monetize Africa. You need a reasonably broad-based tax that is hard to avoid. It is easy to avoid a tax on money income if people can live without money income. So what the colonizers did was to impose either a head or hut tax. Everyone has a head and a hut. From inception, that kind of tax works well to drive a currency. Critics, please note, I am in no way advocating colonization of Africa or anywhere else. This is an historic example used to make a point. Oh, I know the trolls are going to accuse me anyway. Now, once you've monetized an economy, such that a large portion of the members must work for money, incomes in order to buy the necessities of life that are largely available only for monetary purchase, then you can move to other kinds of taxes. It is very common to use wage taxes, sales taxes, profits taxes, income taxes, and wealth taxes in highly monetized economies. These will work once you've monetized the economy, although they would not work in an economy that was not yet monetized. Still, are they the best way to drive the currency? Supply-siders like George Gilder and Art Laffer had a point during the era of Reaganomics when they argued that these sorts of taxes introduce a wedge that discourages work effort or sales effort. If we tax wage income at a 15% rate, think FICA tax in the U.S., then on the margin we've made wage slavery less remunerating than leisure. Note that the wage tax is particularly pernicious because only human labor gets taxed, while the robots get off scot-free. I think the Reaganites grossly overstated the effect, but beyond some point, it does seem reasonable to argue that a tax on wages and other nominal income will reduce the work effort. In my own case, I have on occasion turned down extra paid work because of the 50% or higher marginal tax rate, including all federal, state, Social Security, and city taxes, made leisure much more appealing. Work effort, from the social perspective, is not normally a bad. Through work, we can serve both the public interest and the private interest. Yes, people can and sometimes do work too much, but this is a problem that can be better treated in other ways. For example, requiring employers to pay time and a half or double time wages is a good way to discourage excessive, involuntary overtime work. Apparently, the favorite tax among progressives is the corporate income tax. I read virtually every day another call to raise the corporate tax rate. Given all the attention it gets, this topic deserves a separate treatment, so I'll save that for another installment. Meantime, think about this. Are corporate profits an evil that we want to banish? This is not obvious to me. So tax bads, not goods. We've long taxed various sins. While some confuse the purpose of sin taxes, it should be clear that the purpose of taxing bads is not to raise revenue, but to reduce sin. We want to reduce the sin of smoking, of polluting, of high-speed trading. I'm always surprised when my progressive friends see the Tobin tax, financial transactions tax, as a potentially great source of tax revenue to pay for all the goodies they'd like the government to provide. No, the purpose of a Tobin tax is to reduce turnover, and it would have achieved complete success in eliminating the sin of high-speed turnover if it raised no revenue at all. Ditto the cigarette tax. Ditto the carbon tax. Admittedly, perfection is very hard to find. We've still got smokers, and we've still got carbon polluters for a very long time. Can we think of a tax on bads that can also drive a currency? Clearly, if a cigarette tax was nearly successful, reducing smoking to just a handful of addictive abusers, it would not be a very good driver of the currency. Only the addicts would need the currency to pay the tax, and while a few of us non-smokers would still want to get the currency, knowing we can induce the addicts to work for us to get their means of tax settlement, most people would have no need for the currency. But what about the hut tax? Almost all of us need our hut to live in. It isn't an exceedingly broad-based tax. It would drive the currency. Where's the sin in hut living? The environmental footprint, the land that is cleared, the construction materials, the furnishings, and most relevantly, the energy used to heat and cool our hut. For that reason, a square foot of living space tax on huts would base the sin tax on a pretty good proxy for the sin of hut living. Note, we've already got property taxes, but these are generally based on nominal value of the property. That might be a proxy for environmental sins, but not necessarily a good proxy. A tiny flat in Manhattan will have a nominal property value greater than a 10,000 square foot spread in the wilds of Montana. Of course, the nominal property value tax also hits a proxy for ability to pay. It is a somewhat progressive tax because higher income people live in more valuable property. Thus, the property tax also assesses the sin of excessive riches. However, the square foot of living space tax on huts will also tax the sinfulness of high wealth and income, since richer folk tend to have bigger spreads. It is perhaps as good as the nominal property tax in taxing the sin of wealth. Worth considering, anyway. I have long advocated a more progressive hut tax, a cubic foot of living space tax. It will also tax the sinfulness of environmental impact, since there is a bigger volume to heat and cool. And from casual observation, what I've noticed is that rich folks like really high ceilings, 30 foot high in the case of entryways. The cubic foot tax would be highly progressive. That 10,000 square foot spread becomes 150,000 cubic feet if it has high ceilings. There'd be a strong disincentive to build the monstrosities. We can tinker with the tax, encouraging more outdoor living if that seems to be in the public interest, more open porches equipped with rocking chairs, or giving a break for enclosed space that is not air conditioned. To reward energy efficiency, there should be adjustments for going solar, wind-driven, and geothermal. We probably also need to think about different tax rates for different parts of the country. If we want people to live in, say, Chicago, we might want to provide a lower tax rate there than in San Diego or other places with moderate climates. It depends on how environmental we want to go. I'm not sure we should have humans living in places where humans probably should not be living, but that is a matter of public discussion. We can have a higher rate in Chicago to encourage smaller spaces that need to be heated in winter and cooled in summer, but I suppose it's already hard enough to get people to live in the cold, hot places as it is. Note that the sin tax on huts will reduce the sin of living in high cubic foot dwellings, but it does not suffer from the eventual elimination of tax receipts that a cigarette or financial turnover tax will face. We can live in smaller dwellings, but as long as humans have more than a virtual existence, we've got to live somewhere. It is thus a tax that will continue to drive the currency. I'm not saying that we should move to a single tax, but Henry George was sort of headed in the right direction. Once we understand what taxes are for, we can start to think about what kinds of taxes make sense. More next time.